Hi, everyone, and welcome to Fuel Podcast. My name is Alyona, and we are here to make finance fun. Today, our guest is Alex Volodarskiy, who is the founder of Lemon.io, marketplace of budget engineers. And also, I like Alex how you name yourself, Chief Twitter Officer. And also the person which Twitter I like a lot. So that's why I decided to talk with you today about Lemon.io, about marketplace, about your business model, and actually a little bit about financial management in your business. Hi and welcome.
Hey, thank you. Thank you. It's a pleasure.
First of all, my first question will be I know that you're quite open about your goal to grow your revenue to $100 million. So, first of all, it's interesting to understand what is your current revenue now and how far are you now from your goal. So, can you share a little bit about your current revenue, maybe a number of team members that you have now?
Yeah, we're a team of 60 something people. And our current GMV, our metric KPI is GMV as a marketplace. It's last year it was 15 million. We do around whatever. Last year was 15 million. 100 million is a bait actually. it's a it's a Twitter thing that you like, you know, I play the Twitter game and I want more people to see what I do. And this actually brings a lot of business to for our sales team. And like you have to state who you are, and this is how whatever you state about yourself, the people are gonna talk about you like that. So it's I'm not ashamed of this. It is a bait, but of course it's something I wanna reach, but it's not like our OKRs is just about money and it's about 100 million. No, it's not. But for Twitter, it's Twitter game.
But I'm interested, like, how did you decide to share all this information? So you're very open about sharing number of new customers, of current customers, what is going on with your different marketing budgets and your assumptions. So how did you decide to do that? Because what I see actually from founders, they're like sometimes are scared to share their financial information and I know that we sign many different strict NDAs, and everyone like don't want to share their financial figures. And you're pretty open with that. So how did you decide to do that?
So we're pretty small company. Again, like we did like 15 million of GMV last year. It's not a lot. I don't think I can disclose anything that can actually hurt us. So like for me, building in public, it's a whole movement of building in public when you disclose your whatever you do. And there are a lot of people, and mostly solopreneurs or indie hackers, who share much more than I do, than even have like open pages where they just streamline everything that's going on in the company, all the numbers, all the revenue, all the visitors, everyone. It's just a way to build trust on in social media. And if you do that, people see, first of all, as you're right, like a lot of founders, they don't want to disclose, but they want to lurk. They want to look, they want to learn. And this building in public helped me to build my audience up to first, I think at least 20,000 followers. Helped me with a building in public, because like other founders, they lurk, they want to sign up because they want to know like, oh, what's going to be the number next year or next month or next week. um Also, at some point it became like, I think in 2021 our goal was 10 million. And they became like a chant, like 10 million, 10 million, 10 million, 10 million. I was like inserting everywhere, and people actually follow that, and people actually like that. And we had even a couple of cases when the client came to us and they said, I want to hire because I want to help you gain the 10 million.
That's
So it's it is, I mean, like, again, I have to be open. It is a marketing game. It's a social game where it's like, I'm not passionate about sharing my numbers. I'm like, I don't mind doing that, and I see that other people like it, and I like connecting with those people. So like, I'm playing this game. Actually, don't do this anymore because it became boring and it's not as excited. When you were smaller, even smaller, like every other client was a win, and like people celebrated you. And I was like, I remember we had like a couple of clients who are like $1 billion companies who came to us, and I was like, yeah, the $1 billion company CTO came to us and asked for a developer, and this came from Twitter, and like 1,000 people are like, yeah, So like, it's a Twitter game, and I liked it, and I did it. Now I don't do this as much. I'm playing different game on Twitter.
Yeah, that's so cool because sometimes I discuss this question with other financial people. So, is it possible to have, like pretty open economy, like in the world when all data can be like shared and everything is shared like with other entrepreneurs, and what effect can be from that? So, that's pretty interesting. That already like smaller founders, smaller companies already do that.
Yeah.
So that's just very cool.
So smaller companies, they don't have to care. Like, why do you care? Like, how it's gonna hurt you? Don't disclose something they're gonna hurt you. But like, oh, I have 5 more customers that came this week. That's not gonna hurt you. Other people will help you celebrate this, and they will get more invested in what you do, and this might help your business. But how it's gonna hurt you? Um, and Yeah, when you bigger company, sometimes most of the companies have to disclose if they are like public company, or in some countries like Great Britain, um, if you're in certain revenue, you have to disclose publicly, disclose your revenue and a lot of your information. In I think maybe also Australia, but I'm not sure. At least like Great Britain. But like if you're in the middle, yeah, maybe it doesn't help you anyway. But like if you're small, like why would you care? Do it.
Yeah.
People gonna trust you more because you're open, and this just only will benefit because you are. First of all, you can bring more customers. Then second, you can bring more people to work with you because more people know what it's exciting company, whether they want to work with you or not. Third, uh, it's gonna help you with the word of mouth. More people are gonna know about you because other people will, by trusting you, to talk about you to other people. Because to be honest, like not most of the people don't have any many topics to talk about, and it's true. I know people discuss my boo in public, um, and like, and it only will benefit you because whatever I posted, as soon as I gain some audience, whatever I posted, I get a lot of media inquiries. I got a lot of investor interest. There was almost no downside. Yeah, when you're already competing with some, because when you're like in a couple of million of revenue, you're not competing with anyone. You're just a small boat in a sea, and like no one even sees you because they are like up high with the tens of millions of dollars of revenue. Yeah, but when you grow up a little and like you're somewhere and you're competing with them, maybe this is gonna hurt you because they can use your strategies or something. But when you're small, no one cares.
No one cares. That's true. I know also that you are a bootstrapping business, so you're profitable, and you raised just $60,000 on the start. So how was it possible to build bootstrapping profitable business from the start? Do you have some secrets? I don't know. Can you share some insights how all other founders can do the same?
I don't know how all other founders can do the same because first of all, we're not a bootstrap company actually. So technically, because we raised the angel round, we took angel money. We're technically, and a lot of people will go in technicality. We're not technically not bootstrap, but yeah, we just took on the second year. So before 11i, we had a different business model that was Coding Ninjas. It was kind of different business, and we pivoted in 2020. So when we were Coding Ninjas, we took 60K of investment from two angels, and we gave up a lot of equity. We should have done it, even though one of the investors is a great guy. We're friends now, but still, like, it was a dumb decision. Um, and that's why we're not bootstrapped. But it was the dumbest thing we did, and also we gave all this money to back to Google Ads. So like we we just wasted, like, with no upside. And we should have done something else. We should have done, I don't know, maybe do more sales, and I regret not doing more sales at the beginning. Or maybe take some debt. It's not a lot of money. It's 60K is not that large of an investment. And if you take this as a debt, maybe you'll be more careful with it and not waste it and not give it away for just a few months to Google company.
So, do you think it was dumb decision because just it was small amount, or because he's like spend this money on something like not very significant, and he was able to earn actually this money because of that?
Right. It was just dumb decision. Like, it was a small amount. It was not significant to do something. like again, like we were able to waste it on Google Ads just in a few months, in a couple of months. But also like we didn't know where to invest. Like my premise right now, don't take money if you cannot invest it in, and significantly influence the growth of the company. If you can take 10 million on you and just grow by 20%, it's a dumb decision. Even if the ROI will be positive, like it's just a dumb decision. Like if you can, put 10 million and grow 10x on our scale, not on scale when we were like on 100K of revenue. Like, yeah, maybe that makes sense, but like take money and just put it a lie on in your account, or take money and waste it unprofitably, it's just not the right thing. We should have challenged ourselves and think like, what are other solutions, and like why we're raising, what we're gonna do with the money, how we're gonna. We didn't have an answer. We didn't. Actually, we did. It's not true, because um, we did a test with the Google Ads for $1,000, and we brought a couple of clients, but we didn't challenge ourselves like how else we can bring more clients except just Google Ads. And in general, doing Google Ads before product market fit is just not a good idea. And we did it, and we followed the trap, and it hurt us.
As we are talking already about this marketing challenge, and you mentioned about Google Ads, so what have you discovered recently about marketing channels, and especially what channels you see are the most efficient for B2B business models?
It's hard to say. I don't know general to B2B. I think content is a great thing. Yeah, everyone has to work on content. How to distribute content is a good idea. Is a good question, and like it's very different for everyone. We invested a lot in SEO and we were not successful. We invested a lot in Google Ads, and at some point it was successful, and then it was not successful. A lot of channels that work at the beginning and then they stop working. Like we were very successful with Quora, like doing content marketing in Quora, and we earned, I'd say, I wouldn't be surprised if we earned like $2 million just of Quora. But at some point, it just stopped working. The same with the Google Ads. We were targeting our competitors, and it was working at the beginning, and then like it's just stopped working, just not working anymore. What I've you ask what I have discovered recently. So for in our business, and I'm not talking about generally B2B. In our business, the recommendation is a big factor, because most of the founders, our clients are founders of tech companies, usually like SEO, CEO or CTO, because they're in early stages. Those are companies up to 100 people. The decision makers are still C-level people or founders, so we target them. Most of them would not go to Google and type Python developers. They probably would not do that. How would they discover? They would probably go to peers or investors, and they will ask them. So this is our biggest opportunity, and this is why Twitter is working for us, because they see me, they become my audience, they trust me because I post regularly, and at some point when they need a developer and they see some tweet from me that I have this type of developer, they would come to me and at least try. And this is how they discover. They discover from something they already know, or they will go to peers or investors to ask. So instead of trying to build Google Ads or even SEO, and we still got to work on SEO. Don't get me wrong, but like we will probably be more successful and bring much better leads by building a partners network, for example, or by building an audience for me or for the company, and or for both. This is my learning for last year. I think the biggest learning,
That's
and also and also that's why some of the creators work for us, because there are some creators who people really trusted in terms of building a startup, and when they spoke about us in their podcast or newsletter, it worked for us because they trust the person and they trust the referral of this person to another company.
Yeah, that's true. I discovered the same thing, that this really matters. And first of all, you should create product in marketing to sell your product, and this product and marketing should be also very valuable for even not for your current customers, but for your audience. So
Right.
that's also true. Talking about this approaches and testing different assumptions in marketing, you shared last time that I remember even with this programmatic sale that you will spend $14,000 on this test or something like that. How do you decide in your company? So what budgets do you have for this test? Is it like this amount normal or not normal, or do you have some, I don't know, like maybe some process? How do you analyze these budgets, or I don't know, some KPIs for these budgets?
Right. So we're learning, and we've done a lot of mistakes. Like last year, at the beginning of the last 2022, we had a momentum where we're growing, and we just started throwing experiments, and we're not careful about this. And we got to this point where we thought that our runway is like just a few months, and it was a little scary. So before that, we acted like a VC backed company without actual VC money. So we were just throwing money on new channels and seeing if they work or not. And they were just adding cost. Last year we've tried so many things. Even with sponsorships, I think we spent, I don't want to lie, but something around 400K on just sponsorships, and most of it did work. We spent a lot on content marketing, and it did work. And now after like analyzing, we actually cut a lot of cost, and we had to let a lot of people go from marketing. But like how now we decide, first of all, we see what's working and we double down on what's working. Secondly, when we want to invest in something, we see what do we want to reach in what amount of time, and then we challenge ourselves, are there better ways to do that? Because when you're just looking at the growth and you adding new channels, you never ask yourself if this channel better than the other channel. Now, because we want to stay efficient in terms of being capital efficient and being profitable, we want to ask, okay, we just have this budget and we cannot go over this budget, and is this channel is the best use of this money? I mean, I'm telling you right now the simplest things, but to be honest, like we didn't follow this even 6 months ago. We didn't follow this. Now we're asking if this is the best, if this is the best investment of the money we're trying to invest in this, and can we reach this effect with other ways, channels, or anything else? If we ask this question before taking the 60K, we would never take the 60K, because we challenge ourselves, okay, what we can get with the 60K, like to number of clients, number of revenue. Well, can we get to this revenue without the 60K? Are there any other channels? And there were other channels, like maybe just a few months after that, after we failed with the Google ads, we tried building in communities, and we were successful, got a lot of clients from there. We started building in on top of Quora, and it was successful. Because we didn't have the funds, we have to challenge ourselves how to go. And when we started gaining momentum, we lost this touch of like asking ourselves, like, how can we grow, and where can we grow, and like what is a better way? And this is where we started adding costs, and it was like very a little scary and dangerous, and moment when we didn't feel our grounds. But now this is like we came back to making these decisions, and it's working really well.
Yeah, that's true. And I saw your post about this revenue drop downs was in February, yes, this year, and your decision about cost cutting and very aggressive strategy. So, is this about what you mentioned? So about this like different channels that you decided, okay, we should analyze that and understand what approach we have from this budget. So is this was this post about this type of cost cutting, and maybe do you have some other like some other recommendations? What was important? So what have you learned from this story about cost cutting?
I don't remember the tweet you're referring to, unfortunately. I tweet a lot. But we started losing revenue, I think, in September 2020. And the worst thing is that we forgot, and like I'm saying forgot, but like we lost touch of the fact that our like the effect that we see from what we do right now will be in a few months, because like whatever we do now will affect like lead generation next month, and like the path from lead to a client is also like another few weeks. And we didn't forget about this, but we didn't take this into account, and we missed the signals in like early summer 2022. We lost the signals that the revenue will go down. If we were like more attentive, we would know that the revenue would go down, and we would not hire as much, and we would cut our costs before that. But yeah, in September we started losing money, and I think in around December starting cutting costs, and then in February we're more aggressive about cutting costs.
What were the signals that you say now that you missed? What were the signals about number of leads or something?
Number of leads, conversion, and there were a lot of signals. If we would more attentive now, like we take our analytics much more seriously, and the biggest lesson that the money allocation is as important, and sometimes even more important than knowing which channels will work. So money allocation is an important thing. Just understanding like how to invest in your company and how to make decisions is as important as like believing in this and that channel, or knowing this or that channel will work. Because we were, for example, sure that outbound will work. We saw that one of our competitors is going through mostly from outbound, from self development. And we said, why don't we do that? We never did that before. We did it like a little bit, but like never we did it on a full scale. We hired an agency, even 2 agencies, to do sales development. We started investing in this, and it didn't work as fast as we thought. After 4 months, we had to stop it and cut the costs. But again, like we were not thinking clearly, okay, if it works, how this affects us. If it doesn't work, how this affects us. And now this is what we think about. We're trying to be more considerate of our situation, our budget, of how we perform last quarter. And if we don't have the money to invest, we don't have the money to invest. We have to just deal with it and try to grow with other ways.
That's interesting way of thinking. Very like cost efficient and very like profit oriented. Talking about like your business model a little bit. So you have this B2B marketplace business model. So what metrics do you track? So what is important for you? You already mentioned GMV, but what other metrics like you personally track and trying to analyze, and how often do you do this?
There are things that we look at daily, monthly. We have this when we were crossing this chasm of losing a lot of money. we decided, okay, how many clients do we need to bring? Like we cut costs, and like we did this. Like how much money do we need to bring to be able to be profitable again? And let's calculate how many subscriptions, how many clients do we need to bring? And we set a count, and we said that let's every new client that we bring will be +1, and every client churns will be -1. And we need to get to a balance, not to the count of new clients, but a balance of 100 clients, 100 subscriptions. So because we had high churn at some point, I think in October, end of October, beginning of November, we had balance of -19 subscriptions, negative. And this is where we thought that we were in trouble because we were losing the ones that we were bringing. And this is what we track daily. The whole team looks at it, and every day we say, okay, our balance today was 36. So we went from -19 to 36.
36.
Yeah, it's not as great because we had a lot of churn, and we had to deal with a lot of churn in a few months. But this is what we track daily, and we wanted the whole team to see that like where we're in terms of balance. And this is very. It was a little aggressive, but it was very effective in terms of understanding. The whole team was invested in this, and they were like, everyone was invested. Like, what can we do to increase this number? There are metrics that we look monthly. There's a bunch of them, but mostly we look at GMV, revenue. We look at leads. We look at churn. We started looking at churn much closely. We started analyzing churn. We have a period when there's high risk of churn, and we started analyzing it even closely and to watch it even closely. We have metrics for every department, for marketing, for talent acquisition, and we'll look at monthly. We'll look at like, where are there any signals of us having a momentum or having a downturn.
Great. And talking about this number of new customers that you said, is it like your North Star metric in your company now? So like the one metric that all your team members trying to track. So is this like your goal to have like this number of customers? I don't know. Is it the most important like metric for your team? What do you think now?
You could say that this is not North Star, even though it doesn't count as North Star, because it's not a clear indicator. It's just a way we decided. Everyone agreed that this is just a right way for us to see the progress. But like, in terms of actual clarity of data, it's not a good metric. We mostly track GMV as a North Star. Yeah. But for the team, just to be aligned, and to know that everyone is moving the same direction, this balance metric was a great thing.
Yeah, that sounds interesting. And it's also, I sometimes ask a question about if you share your financial information with your team, but actually in your case, I understand that everyone can read your Twitter and understand what is going on in your company. Yeah. So that's why everything is pretty different with that.
Yeah. But if you always, I don't know, if you always maybe growing, maybe it doesn't make sense to share with the team. But like, if you have as every company has their moments, like, how would company know that you're not doing well if you're not doing well, right? Like, they have to know, and they have to have an opportunity to influence that. Because if you don't if you don't make your company invested in what you do, they're not going to be invested. Like, and like, you're not the only one. Actually, you're far from, like, I'm the last person who I'm probably not the last person to influence the company, but like, I'm not the only person to influence the company. Most of the influence comes from people who do like day-to-day job, and you have to have them invested in what you do. And like, sharing everything what happening in the companies is the best way to get them invested.
Yeah, that's pretty cool way of thinking, that everyone can impact this numbers. And sometimes I think founders think, okay, that's only me and my executive team members who can do something with that. But yeah, that's true. Do you benchmark maybe your performance with some other maybe public companies or any other competitors? Do you have actually some benchmarks in your business?
I don't know. I don't know. I never thought about this. Yeah, of course you compare yourself to other companies. Like, look, this company did $300 million. Like, why I was so dumb? Why I'm so poor? Yeah. Right. Yeah, I do that. No shame in that. But
But not any like public companies or something like that. Maybe
we don't have public companies. We don't have public companies in our space.
Oh, even like that.
Yeah, the biggest company, TopTal, is private. There's a company that might go through might go public. They look like they want to go public because they raising and increasing the capital cost, like, significantly all the time. But we have not true. Not our direct competitors, but like Fiverr or Upwork. We wouldn't compare ourselves too much to them because it's a little bit different business.
Yeah, it's not just about developers. But interesting that you in your niche, so you don't have like really public company.
So again, like Fiverr is also like Fiverr and Upwork is a talent marketplace, but it's just totally different use cases for us, and we'll look at them, but like not very much. We'll look at other companies much closer, and all of them are private.
What companies do you check? Maybe do you check companies, I don't know, not from your like niche, not like marketplaces, but other companies, and you like trying to understand, okay, that's cool what they do, so let's try, for example, let's try for us maybe some similar strategies. Do you have such companies?
Um, Look, we have a lot of competitors who are not direct competitors. Like we have like every outsourcing company in the world is our competitor, I'd say, because they resolve the same question, the same problem. LinkedIn or AngelList is our competitor because or like marketplaces that are a little bit different, but also tell marketplaces like um, Hired or similar. Yeah, of course, we'll look at them. We'll look at some of them, but we don't not too much. We have our own story, our own users, and if we're gonna be like just adopting whatever the market is doing, I don't think it's gonna help us as much because the the biggest is our business is very operational, and town marketplace is it's a commodity business, and it's very operational. So the biggest value we bring in product wise is internal tools. How internally do we process like engineers and requests and etc. etc. And like we we innovate there. Yeah, of course we'll look at like how other companies take self-serving, and we see if this works for us, of course. Yeah. But we're not too much hung up on that.
Yeah.
For example, we know that the biggest competitor does billing completely different from us, but it just wouldn't work for us. Even though like they're the big company and they are doing, I think they're making at least they're bigger at least 20 times, 20, I think even more, like maybe 30 times than we are. Like how they charge clients and and pay their developers, it's just not something we want to do.
Yeah, that's understandable. And my last question will be about financial advice to early stage founders. So, like, just to other founders, like from your personal experience, and you're pretty open to share all your mistakes and all your challenges and financial challenges. What will be your, I don't know, top two, three advices to early stage founders in finance?
Um, I just can't tell. I cannot give advice because like we're small after so many years. Um, we're not tiny, but like we didn't grow like exponentially like other companies. So like, don't take my advice. But I want to say something that I felt comfortable with. I didn't feel comfortable. So taking investment early on, I didn't feel comfortable with, and it was a challenge that I didn't like. Being profitable, I felt very comfortable with, and um, then not investing a lot of money until until I started making money I was very comfortable with this. So I started this marketplace through email. So I was connecting clients and developers through email for a long time until I had like maybe $10,000 in revenue. Um, I felt comfortable with. Um, Investing in paid advertising, I didn't feel comfortable with, and I wouldn't do it again before the product market fit. Um, and lastly, investing just in growth, not being aware of like what perform, what doesn't perform, I didn't comfortable with. And we actually did. We hired a data analytic and data engineer pretty late in our journey, and if I could do it, I would do it not from day one probably, but very early on in the first half a year to a year. I think we would hire a data analytic to help us process all this data, understand like better our business, what's going on in the company. Because um, after we hired data analytic and after we hired product people, I found myself being completely wrong in most of the things that I was almost sure about. And this is you know shame on me. I didn't do it before because I was like so much sure, in a lot of things about like how our business performs, how our clients see us and interact with us, and I was completely wrong in a lot of fundamental things. So I would hire product people early, and I would hire data analytic person early.
That's very great advice, and all that you said. So not advices, but what is comfortable, what is not comfortable for you. But I feel exactly the same during building during this startup building now for myself. So that's why it's very cool. Thanks for sharing all this information, all this insights, and hope founders will find this very helpful and can avoid some mistakes in building their startups. Thank you so much, Alex.
Thank you. It was a pleasure.